A Connecticut man has been warning the public, get your money out of U.S. banks immediately. A historic financial reset in 2023 could cause a run on the banks unlike anything in our nation's history, he says. His warning has already reached 8.4 million Americans and 30 TV networks. And yet, few people realize this could actually happen on U.S. soil, or what a sizable impact it could have on your wealth, especially if you have large amounts of cash in the bank right now. Normally, I might ignore all this, but it turns out he's a Wall Street legend whose work predicted the COVID crash, the 2022 crash, and the 20 best stocks of 2022, and more. Today, he's urging you to move your money into a new vehicle 50 years in the making. He's even posting a free recommendation, which you can access at reset2023.com. His work pointed to a 10,090% gain back in 2020, so don't miss this. A new vehicle outside the banking system could massively boost your wealth. You can get the details today at reset2023.com. Again, that's reset2023.com. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show on Stansberry Research. Well, the CEO of the world's largest online exchange, Binance, has come out saying that the crypto industry will be fine following the onslaught it has suffered over the past few days. My question to my guest today is, will it? We're going to be talking about this and so much more. So please welcome back to the program, Nick Prouten. He is the Chief Operating Officer for the global payments platform, LODE. Nick, always good to be with you. Welcome back to the show.
Thank you for having me back, Danielle. It's always a pleasure to be here.
Well, anyone following cryptocurrency news knows that every day we're waking up to what seems to be a domino effect following the fallout of FTX, Nick. Like I said, CZ, the CEO of Binance, says that despite all this, crypto will be fine. They've announced an industry recovery fund. But my biggest question to you here today is, will it? What state is the crypto sector in right now?
Well, I'm not gonna, paint it as all stars and rainbows. CZ is right in the long term, but for the time being, the industry has really kneecapped itself. What has taken place here is a huge disruption in people's trust and faith in an industry that is only just still trying to prove itself to the broader global community and traditional financial institutions. For something like this to take place at such a crucial time, where economically and geopolitically there's already a lot of instability, is really bad. And beyond all of this, let's not forget the human beings that are actually tied up in all of this. For all the people who have lost their money from not just FTX, but some of the other businesses that are also on the verge of collapse or collapsing as a result of FTX. My heart really goes out to those people. It's an absolutely devastating loss anytime this type of thing happens. But with that being said, on a long-term macro perspective, I do see the industry recovering and moving forward in a strong sense. This happens relatively, I shouldn't say relatively frequency, but it's not uncommon for this to happen in innovation cycles where after a boom, there is somewhat of a cull and a collapse. We saw this happen a lot in the Web 2 space. Lots of things that were massive at the time, things like Netscape, which were for but a moment the biggest internet companies out there. You saw those become the Amazons and the GoDaddies and the institutions today that we are now look at as somewhat these monoliths that are almost indestructible. So very much in that sense, I think that this is part of the natural development of the crypto industry, albeit a very, very expensive lesson.
Well, that's exactly what Michael Saylor, CEO and founder of MicroStrategy, said, that this is an extremely expensive lesson for cryptocurrency. But my question to you is this, Nick. As an investor, how do you know, right? How do you know where to park your money and who to trust right now?
Yeah, I think this is really a shining moment for the entire decentralized finance space. We have to go back to the roots of what blockchain was really about, which was the idea of removing intermediaries. You do not need somebody in between you and your capital or the other side of that transaction. You can do it all directly with blockchain technology. And somewhere along the path, people got overly excited about the concept of the speculative nature of blockchain and what you can do on the speculative and investment side. And put their trust in these financial institutions and these centralized exchanges, which are filled with human beings who are prone to greed, like everything else, and we lost sight of that original focus of what cryptocurrency was really about. So for DeFi, which it stays true to that mandate of you control your keys, you control your money, allow the smart contracts to autonomously perform their tasks, and you don't need a human being getting in the middle of that or managing that. I think now is a really opportunity for a big opportunity for this side of the crypto industry to stand tall and say we are the future of finance. I think when you look at the way the leveraging of Bitcoin was going, and you kind of take a deeper look at the analytics, it was obvious that the market was in some sense being propped up, and that it was inevitably bound for collapse. And that's not a level of analysis that most people are privy to or have an understanding of. So, for the common individual, you would have never seen this coming in many circumstances, but you shouldn't have had to. Here's the thing. You shouldn't have had to do that in the first place, because these are institutions that are displaying themselves as we're regulated, we're your trusted partner. We are the beacon of light in this. And I'm not just talking about FTX here. I'm talking about all of these major regulated exchanges that come out there. So for the fact that they've gambled away essentially everybody's cash, it's completely inappropriate. And I hope that these people look at some very hard sentencing, because you've ruined some people's lives.
Absolutely. Nick, what do you think will happen on the regulatory side now? Will regulation come sooner, and how desperate are we in need of it?
Yeah, it's an interesting question. I think regulation is a delicate balance. Too much regulation stifles innovation. I mean, British Columbia doesn't even have Uber where I live, right? So too much regulation, I think, is ridiculous. But this just goes to show that you can't put all your confidence in these institutions to just be good for it and do things in a respectful manner. Will it bring the right regulation? I don't think so. I don't think the regulators really even understand what blockchain is or how it works, and there's too much money in politics to get the right kind of legislation out of it. So ultimately, what this is going to do is it's going to make a lot harder for people who don't have substantial capital, or people who are just getting started in the blockchain space, to operate in the West. Um, as to how fast it will bring regulation, I don't know. I think, like most things, it'll come over the next couple of years. Regulators tend to drag their feet on things, and that's pretty much how I see it taking place here. Probably some swift knee-jerk reactions, but nothing instrumental in the immediate future.
News came out that the lending arm of the crypto investment bank Genesis Global Trading is now pausing new loan originations and redemptions. They say the decision reflects a sign of contagion outside of BlockFi, which is reportedly preparing for a potential bankruptcy filing. This is according to the Wall Street Journal. When you said you're not surprised by this shakeout, but how much more could we possibly see here?
Well, I think there are. I mean, going out on a limb here, I think there's a heavy portion of these institutions and businesses that are all lending to each other. They're all
Right,
dipping their hands in the same pie, and
right.
now there's no more pie. And so, people weren't responsible with their cash. This is what it boils down to. Administrations and management of these companies were not responsible with the cash. They figured they could continue to prop up the market, and now, pardon my language, but shit hit the fan, you know, and we're watching the fallout from that.
And as an investor, because we tend to lump, oh, then you shouldn't touch Bitcoin or Ethereum. It's just like all lumped into one thing.
Yeah.
But how important it is to keep the lines separate here and to think differently as an investor?
Totally. And this goes back to what I was saying about decentralized finance earlier, right? This isn't the fault of Bitcoin or Ethereum or any of the great projects out there that are building on top of blockchain technology. There is so much potential in the sector to do good things, not just in the realm of finance, but for other industries as well. We're seeing the Web3 ecosystem really start to come into its own, and this is all positive stuff that is going to give people access to really fantastic financial tools and other solutions as the industry develops. So Bitcoin really isn't the bad guy here. What is the bad guy is these companies that build themselves around these assets and have chosen to manage people's assets on their behalf and act as financial institutions comparable to banks that we see in the traditional world. And frankly, banks aren't really that trustworthy either. I mean, that's what a whole bailout is oops, we screwed up and we need somebody to come pull us out of that.
Enter a great shift for our next discussion. I want to talk about. Thank you for that. Made my job easier. I want to talk monetary reset. Nice light subject for us here, because last time you were on, you had a really valid point that the reset for you really began with the transition. And the introduction of Bitcoin. That was kind of when you saw the start of it. I just had an incredible interview with Frank Giustra on this very topic, where he feels it's all unfolding right now. I mean, we hear the rumblings, China, Russia looking at perhaps a gold-backed currency. We're seeing the BRICS growing bigger and stronger, looking to move away from the stronghold of the United States. So there really feels like there is a shift happening right now in this moment. Would you agree, Nick?
Well, I mean, to the whole gold back currency thing, I gotta poke a little fun here. Lode did it first. We saw it sooner, and that's really what we've been about this whole time, is providing people with a decentralized alternative. So, do I see the shift happening? Absolutely, it is happening. You can't bury your head in the sand any longer. You have some of the biggest with the whole BRICS situation. You have some of the biggest upcoming superpowers in various senses in the world coming together to sort of rebuke the system that's been set up in the West, and that is it's really concerning in a number of ways, because we've lived in relative comfort for the past 50 plus years, at least economically speaking here in the West. So the fallout from that is absolutely massive. But within all this disruption and instability that's taking place, uh, outside of the West and inside of the West, there are silver linings here, and there's opportunity for great projects to come along and help be a part of positive change, because you can't stop the change. There's a lot of people out there that have that kind of belief, but I don't think you can. You can't stop the wheels in motion.
Well, and that's a valid point. I just want to bring something up, because there are a lot of people doing positive things, like yourself. But how do you manage to stay afloat or navigate the negativity that you're surrounded in? Because I'm sure you're getting a lot of calls, people saying, "Well, why should we trust you guys?" Right?
Yeah, absolutely. There's a number of different ways to approach this. There's the human level where we talk to people, right? People have already put their confidence enough, and it's a matter of reassurance and helping people on an emotional level. But it's largely education as well. Lots of people are just not they're not in it. They're not living and breathing blockchain technology the same way I do in the day in and the day out. So I have to at times coach them and teach them about how we actually don't have control of your funds. That's what Load is all about. We give you the autonomy and the full control over your assets. And that's so important, right? So we can't freeze your money. We can't stop you from withdrawing. We can't do any of that. And so there's that element as well. Then there is like the kind of stuff that you're starting to see from Binance, and lots of precious metals backed projects do this already, which is a proof of reserve, right? Proof of reserve, transparency, third party auditing that is displayed publicly. All of that stuff plays a vital role in helping individuals and investors and institutions have confidence that you actually have what you say you have, right? And those things kind of all work in tandem to help bring people back to a place of trust.
And Nick, can you help educate the audience a little bit about why a gold backed or silver backed currency, why the benefits?
Why? Well, I mean, I would say just look out the window right now, right? How bad has inflation been this year
It's pretty
alone?
bad. We're right across from the most expensive apartment building in all of New York City, so I would say it's pretty bad.
It's pretty bad. Inflation is running rampant. You have your speculative investments like Bitcoin and much of the crypto market go through the absolute ringer. Most traditional investments are going through it right now and in a major bear market. So, through all of this, gold has performed relatively well and maintained somewhat of a bastion. So why do you want a gold backed currency? So that you can have some stability and peace of mind, right? It's not maybe as exciting as putting all your chips into Bitcoin, but you can't screw with thousands of years of human confidence and stability. It's really a no brainer that at least a good chunk of your wealth should be stored in a stabilized inflation resistant, devaluation resistant asset. And, for those out there who don't necessarily want the whole currency angle that LODE prides itself on, which, again, we produce gold currency that you can spend like cash. Um, that's okay, but all the world's major financial institutions, the smartest investors in the world, have their funds held in precious metals. So why wouldn't you do the same thing? Why wouldn't you protect yourself?
I think when we spoke back in June, there was a lot of new excitement things you were working on at the company. Can you give us an update of how things are going and what's next for you guys?
Yeah, absolutely. So we did a great job of launching our assets into the Web3 environment, and we've had some really fantastic conversations with the Avalanche community. And there really seems to be a huge amount of excitement about us collaborating with them and collaborating with all the different DeFi projects in the ecosystem to really give loads, currencies, and assets a good home base. I mean, the idea is to expand well beyond that, but it feels so great to have a full-blown blockchain community standing strong behind you, independent of the people that have already said yes to your project, right? We're talking about hundreds of thousands of people learning about LODE daily and excited about what we're doing. So that's a very exciting, positive momentum for the project. We have lots of really exciting business development opportunities with various partners who are interested in using gold currency as a form of payment because many of these businesses have international operations. So they're not just based in one region of the world, they're based in, three or four, maybe as many as 10 at any given time. And so what gold currency does as a universal payment option is it actually gives people the ability to sort of circumvent a lot of the costs around FX and paying employees in different regions. So we have some strategic partnerships like that we're working on that'll be coming to light in early 2023. That's all very exciting stuff as well. And then, yeah, we have so many different decentralized finance protocols that have now come to us or been introduced to us that are excited about doing business with us. The one final thing I will say, though, Daniela, is that we are in December, moving into the MVP of our of the world's first silver and gold bullion NFT platform, which is really going to uh, shake things up in a really interesting sense because now people have an alternative to trading in the paper market, which we know is over leveraged, which we know has more paper in circulation than has physical backing. So this is a really exciting opportunity to try something different, and hopefully institutions and investment funds see that as well.
How would you say that Web3 protocols are being meshed with the modern economy?
Yeah, I mean, it's important to understand what Web3 really means. Web3 is a feature set of things that you can do using decentralized applications, right? So you have a wallet, and rather than having an account with the bank, you can take your wallet and plug it into these decentralized applications. Again, so you don't need that intermediary in order for you to perform trades and functions and take out loans and all these kinds of things. Um, you can just go directly to the smart contract and plug in your wallet, do the function you need to do, and then get out of it again. And that, in another sense, Web3 allows you to have more ownership over your data. One of the big things in the Web2 world was that you give up all your information to Facebook, you give up all your information to whoever you're giving your email and password to. Web3 flips that narrative and says you actually don't need to give away any of your information in order to have access to tools and features and functions, which is a really exciting premise as well. So Web3 integrates with us in a couple different ways in the modern economy, and I only think those kinds of ways are going to increase based on what we've seen with FTX.
Yeah, and I don't want to water it down, but the philosophy I believe behind Load is really giving power back to the people, restoring gold and silver as money into the system, going out and being able to actually buy things with gold and silver. Am I correct in that?
Yeah, I mean, LODE always is and has been about restoring silver and gold to the monetary system. Most of human history, we've used precious metals as the backing for our currency. During these times, we saw less inflation, less devaluation, and we moved away from that for some, depending on who you ask, some pretty nefarious reasons, right? So this is an initiative and a desire to use a standard that we know works and return to that. And I think based on what, going back to the points that you were talking about earlier about China and Russia, gold-backed currencies, BRICS, and all of that, I think this is really lending credence to that argument, right? Um, Lending credence that there is merit to this way of doing things, and there is value in returning to this type of a standard. And we're already seeing in the market right now, based on what's happened even before FTX, a huge surge of interest in this type of currency, and I think it's only going to increase in time. It's part of that shift that's taking place that you were mentioning earlier.
Really good stuff, Nick. I appreciate you bringing, I guess, some positive news despite all the negative headlines we've been seeing. I appreciate your time today. Thank you.
Thank you so much for having me. Take care, Danielle.
And thank you all for watching. We'll have more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show, and don't forget to sign up at danielacambone.com to keep on top of all these great interviews. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.